Hello friends, in our previous lecture we have completed case 3G and case 4G. Today we are going to learn a new case, that is case 5G, and I would like to tell that case 5G is the mixture of case 3G and case 4G, because if we are seeing the details about case 3G, in that the new partner is bringing his share of goodwill premium in cash, and if that is withdrawn by partners. And in case 4G, the goodwill premium is not brought in cash. So in case 3G it is brought in cash, in case 4G it is not brought in cash. So what is the difference between entry of distribution? In case 3G, entry for distributing is premium account debit, partners account credit. Whereas if it is in no cash, that is according to case 4G, then instead of goodwill premium we will use new partner debit, old partner credit. And in that case, if any old partner is gaining, then he also will be debited. Now mix this case 3G and 5G, 3G and 4G. That when a new partner is partially bringing in cash and partially not bringing in cash. So what is the entry? The amount which is brought in cash, premium for goodwill account debit. The amount which is not brought in cash, new partners account debit, and all partners will be credited with the total amount in their sacrificing ratio. Only that thing we have to learn in this case 5G. It is the mixture of 3G and 4G. Which is brought in cash, it is debited to premium of goodwill. Which is not brought in cash, it is debited to new partners account, and all partners are to be credited. So it is again very easy. Let's start. So everyone, case 5G. Okay. When only a part of the premium for goodwill is brought by a new partner in cash. So what is the if? When only a part of premium for goodwill is brought by new partner in cash, in bracket you write partially cash, no cash. Means some part is for cash, some part is for no cash. Okay. This case is mixture of case 3G and case 4G. Full stop. All other entries would be same except the following journal entry about distributing premium for goodwill. So we will show that thing as per all the cases so you can understand properly. We will explain again about case 3G, case 4G, and we will make entries for case 5G. Now you have to know that in case 3G it was fully cash. In case 4G it is no cash, that goodwill premium, and in case 5G partial cash. Now we will learn the entries of case 3G, 4G, and based on that we will make entries for case 5G. for you people only, that if you have learned properly this case 3G and 4G, you can understand that thing. So how we were distributing the premium of goodwill as per case 3G when it is totally in cash, we were writing such entry: premium for goodwill account debit to old partners capital or current account in sacrifice ratio, or if any old partner has gained, then how we were writing the entry? Premium for goodwill account debit. Now one old partner is gaining instead of sacrificing, so old partners capital or current account debit, and this partner is gaining to old partners capital or current account who is sacrificing. In which ratio? Again sacrifice ratio. So these entries we were writing normally for case 4G. Now in case 3G. Now in case 4G, what we were doing, as premium of goodwill was in no cash, so we were adjusting through capital accounts. So entry for distributing for that: new partners capital or current account debit to old partners capital or current account in which ratio? In sacrifice ratio. Again for that, if any old partner has gained instead of that sacrifice, then what was the entry? New partners capital or current account debit, old partners capital or current account debit who were gaining to old partners capital or current account who are sacrificing. In which ratio? Sacrifice ratio. Now friends, we want to make the entries here. See, you can see when the goodwill is brought in cash, then premium to partners. When goodwill is not brought in cash, new partner to old partner. Now when goodwill is brought in partial cash, so the amount which is brought in cash is debited to premium, amount which is not brought in cash is debited to new partners, and old partners will be credited. So we are making entry here: premium for goodwill account debit, and this should be in cash. Then new partners capital or current account debit, this is in no cash, to old partners capital or current account in which ratio? Sacrifice ratio. Means the total amount is divided in sacrifice ratio. Again here also one or, if any old partner is gaining, then we will debit this. If any old partner has gained, then what entry can be written for it? Premium for goodwill account debit. New partners capital or current account debit. Old partner's capital or current account debit. To old partner's capital or current account. Cash, no cash, gaining, sacrificing in sacrifice ratio. So friends, you all need to write these columns so that you can understand thoroughly that how is the goodwill premium distributed. And in big sums, this only thing is very important to learn. In big sums, this thing is only very important to learn. Okay, so everyone will write this entries like in this way. So to learn the entry for distribution, first we have to know about fully cash, about no cash, about case 3G and case 4G, which we have learned yesterday, and so that we can write or learn the entries for case 5G. So all write the things, and now we are again going in question number 4, sum number 7, 8. Okay. Question number 4, sum number 7. We will start the sum with necessary calculations, and before that we will read the sum. Page number 206, sum number 7. B and C are partners. Their old ratio is not given, so it is termed as equal. D admitted as a new partner. D brought 50,000 as capital and rupees 14,000 in cash out of his share of goodwill of 20,000. So total goodwill share is 20,000. In that he is bringing 14,000 in cash, so 6,000 no cash, so that we can know this is case 5. So first necessary calculations. In that first calculation required is sacrifice ratio. Now for that, A is to B, old ratio, as it is not given 1:1, so old share 1/2 each. Sorry, partners are B and C, not A and B. After that, new partner D is admitted but share is not given. Now nothing else is given, so we can say that old ratio is equals to sacrifice ratio is equals to 1:1, as nothing more is given. Then number 2, share of new partner D in goodwill. Now see, don't make the mistake. D is bringing D's share of goodwill is 20,000. Now out of this 20,000, this is partial cash, because from this 14,000 is in cash, so 6,000 will be in no cash. So whenever we have in partial cash, we have to distribute in this way. Now no partner is gaining, so third calculation is not required, directly starting the journey. Now looking at the information of the sum, according to the format, first entry is to write off the old goodwill. That is not here, so we are not writing. As per the format, second entry is for writing the new partner's capital. New partner D is bringing 50,000 as capital in cash, cash account debit to D's capital account 50,000 he is bringing. As per the format, third entry is about bringing the goodwill premium in cash. He is bringing 14,000 in cash only. So the entry would be cash account debit to premium for goodwill account. And out of 20,000 he is bringing partially 14,000 in cash. Next entry as per format is to distribute the goodwill premium among partners. Now out of 20,000, 14,000 is in cash, so remaining 6,000 in no cash. So premium will be debited with 14. New partner is not bringing 6,000, so new partner's account will be debited and old partners will be credited. So the next entry is very important. Premium for goodwill account debit. This I will write in bracket cash. Then new partner's name is D. D's capital or current account debit. This is no cash. 2. B's capital or current account 2. C's capital or current account in the ratio of sacrifice. Premium is 14,000. No cash is 6,000. Now if you make the total, 14 plus 6 is 20. Now out of this 20,000 in the ratio, equal ratio, so 10,000 each will get. Now partners are not withdrawing. Now see, in this case, if partners want to withdraw their goodwill, they can withdraw only out of 14,000. They cannot withdraw 20,000 because it is brought in 14,000 in cash. So the sum is over. So what was in the sum? Old ratio and share of new partners are given. Then share of new partner in goodwill is given, but from out of that share, 14,000 is in cash, remaining 6,000 in no cash. Now none other information is given. Now as per the format of journal entries, old goodwill is not given, so it is not required to write off. Second entry is for bringing new partners capital, so cash to capital 50,000. Next entry is to bring premium of goodwill in cash. He is bringing, but in partial cash, so the cash which he is bringing is to be debited, cash account debited, premium for goodwill account credited. Now for distributing, the thing which is brought in cash, premium account debit. The thing which is not brought in cash, new partners account debit, that is the capital's current account debit, and it is distributed among all partners in sacrifice ratio. So B's capital current to C's capital current. 14,000, 6,000 is 20,000. 20,000 in equal ratio is 10,000 each. So the seventh sum is over. Now going for the eighth sum. Going for sum number 8. A, B, C are partners sharing profit and loss in the ratio of 3:2:4. They maintain their capital accounts by fixed capital method. Underline fixed capital method. So, for adjusting the partners' capital and goodwill and all, excluding capital, always current account will come. Only when he is bringing the capital, capital will be credited. In all other transactions, current account will be credited. Admitted D as a new partner. D brought rupees 70,000 as capital and 30,000 of share of goodwill in cash. Now, first you have to look that 30,000 is the total share or he is bringing partially. Let's read. At the time of admission of D, balance of goodwill means this is old goodwill was 40,000, 45,000. At the time of admission, goodwill is valued means this is new goodwill. Now see, in friends, in a one sum, new goodwill is also given, share is also given. So first we have to check that 1,60,000 into share of D is equal 1/4. So sorry, not 1,60,000, 1,80,000 into share of D is 1/4 according to the new ratio. So 1,80,000 into 1/4 is 40,000, 45,000. Now the share of goodwill is 45,000, but he is bringing only 30,000. So from 45,000, 30,000 is in cash, 15,000 is in no cash. And the new ratio is also given 1:1:1. So now we will calculate sacrifice ratio on the given information of old ratio and new ratio. Number 1, sacrifice ratio. Okay. A is to B is to C is to D. Old ratio 3 is to 2 is to 4 dash. Old share 3/9, 2/9, 4/9 dash. Now new ratio 1 is to 1 is to 1 is to 1. New share 1/4, 1/4, 1/4, 1/4. Now sacrifice is equals to old share minus new share. So sacrifice of A, old share of A is 3/9, new share of A is 1/4. 9 4s are 36, 4 3s are 12, 9 1s are 9. Answer 3/36. Sacrifice of B, old share 2/9 minus new share 1/4. 9 4s are 36, 4 2s are 8, 9 1s are 9. So minus 1/36. So friends, one of the old partner B is gaining instead of sacrificing. So he will be debited. So now sacrifice of C, 4/9 minus 1/4. 9 4s are 36, 4 4s are 16, 9 1s are 9. 16 minus 9, 7/36. Okay, so A is to C, sacrifice ratio 3 is to 7. Partner B will gain in 1/36th share. Okay, A and C is sacrificing, B will gain in 1/36th share. Second calculation, share of new partner D in goodwill. Now friends, once more I will tell. Share of goodwill is 30,000 in cash. Also new goodwill is given. So first it is our duty to check whether it is okay or not okay. Okay. So don't write the share now. Calculate as per the rules. New goodwill into share of D. New goodwill is 1,80,000. Share of D is 1/4. So it is 45,000. Now in the book it is given he is bringing 30,000 is in cash. So we can say it is partial cash. Why partial cash? 30,000 is in cash. So remaining 50,000 is no cash. Again I will repeat. Share of new partner D in goodwill is given. He is bringing 30,000 in cash. But as new goodwill is given, it is our duty to check 1,80,000 into 1/4, 45,000. Out of 45,000 he is bringing only 30,000. 15,000 is not bringing in cash, so it is partial cash. Also one partner is gaining instead of sacrificing, so one more calculation is required. That is calculation number 3. As he is gaining, so goodwill payable by old partner B. Goodwill payable by old partner B is equals to formula new goodwill multiply gained share. New goodwill multiply gained share. New goodwill is 1,80,000. Gained share is 1/36. So 1,80,000 into 1/36 is 5,000. So old partner will have to pay 5,000. Now all the calculations are over. Let's move towards the journal. Okay, as per the format, first entry is to write off the old goodwill. Here in the book it is given that at the time of admission of D, old goodwill was rupees 45,000 in the balance sheet, so we should write it. So old goodwill has debit balance, so partners will be debited, goodwill will be credited. Is current account debit. Why current account? It is as per fixed capital method. B is current account debit, C is current account debit to goodwill account. Now goodwill is credited with 45,000. Now 45,000 is to be distributed in 3:2:4. So 45,000 divided by 9 into 3, 15,000 is equals to 2 is equals to 10,000 is equals to 4 is equals to 20,000. So 45,000 in the ratio of 3:2:4, 15, 10, 20. Second entry as per the format is bringing capital in cash. So let's see capital is in cash or not. So if we are reading the question, we are seeing that 70,000 is brought as capital in cash. So the entry would be cash account debit to D is capital, not current, because for bringing capital account is only used. So 70,000. As per the format, third entry is regarding bringing goodwill of premium in cash. Now total is 45,000, but 30,000 is only brought in cash. So cash account debit to premium for goodwill account, rupees 30,000. Now as per the format, the next entry is for distributing, as it is brought in cash and the remaining amount is not cash. So the cash amount will be debited with premium for goodwill. No cash would be debited with the name of new partner. Also one old partner is gaining, he will be debited, and remaining two partners who are sacrificing A and C would be credited. So the fourth entry is little bit important. Premium for goodwill account debit. This should be in cash. Then new partner's name is D. D is current account debit. This should be in no cash. Then B's current account debit, as B is gaining, to A's current account to C's current account. They both are sacrificing. Now premium for goodwill is 30,000. No cash amount is 15,000. Goodwill payable by this partner is rupees 5,000. So now let's take the total. 30 plus 15 is 45. 45 plus 5 is 50. Now 50,000 should be in the ratio of 3:7. So 50,000 divided by 10 into 3 is 15,000 and 35,000. And this should be in sacrifice ratio. Now in the sum, nowhere it is written that partners are withdrawing their share of goodwill. So this is only to be done. So as per the format, first entry is about writing the old goodwill. Second entry is for bringing the capital. Third entry is for bringing the goodwill premium in cash. Fourth entry is for distributing. Now the thing which is brought in cash is debited to premium account. Which is not brought in cash, rupees 50,000 is debited to his name account. Then one partner is gaining, instead of sacrificing, he is to be debited, and the partners who are sacrificing are credited in their sacrifice ratio. 30 plus 15, 45 plus 5, 50, 50,000 in the ratio of 3:7, so 15,000 and 35,000. So friends, our sum number 8 is also completed. Hereby we complete case 5G. Now one sum, 13 sum is there, which is of mixture of case 3 and case 5. Now what is the mixture? In case 3 and 5, one is fully cash and one is partial cash. But in case 3, partners are withdrawing their share of goodwill, so that sum is kept for 3 and 5. Now one more entry will be added when a partners are withdrawing. But you remember, when partners are withdrawing goodwill premium, they can only withdraw the goodwill which is brought in cash. So if they are telling partners are withdrawing half amount in cash, don't take their half amount directly, because they have brought in cash that amount, and that amount should be that amount is to be withdrawn. Or if for withdrawn it is not given, then some additional things are given in that sum, so we have to see that thing. what is given in 13 sum. That is some special sum. Okay. So now we will go for the 13 sum. X and Y, page number 207, are partners sharing profit and loss in the ratio of 2:3. Old ratio is given. Admitted Z as a new partner for 1/5 share. Goodwill is valued at 20,000. New goodwill. Balance of goodwill appeared as 15,000. So this is old goodwill. Z brought 50,000 as his capital. 80% is share of goodwill in cash. So whenever we are calculating his share of goodwill, two parts will do: 80% cash, 20% no cash. Old partners withdrew 40% of the amount of goodwill in cash which is credited to the capital account. Underline, they are withdrawing 40% amount. So how to do, we will show in the journal entry. After Z admission, one more thing. After the admission of Z, the profit of the first year is 60,000. Now we have to distribute this profit within 3 partners. Now why within 3 partners? Because after Z is admitted, at the end of the first year, they are getting a profit which is to be distributed among all partners. So in this sum, new ratio is also required. So first of all, as per our calculation, we are only calculating this sacrifice ratio. Now friends, first of all, one more thing. In this sum, old ratio is given, share of new partner is given, only that thing is given. So old and sacrifice will be same, but for calculating new ratio, we have to do some more steps. Okay. A is to B. Old ratio is 2:3. So old share will be 2/5, 3/5. Partners are actually X and Y. Share of new partner Z 1/5. So based on this information, we can say that old ratio is equals to sacrifice ratio is equals to 2:3. So none of the partner is gaining. So third calculation for that is not required, but one extra calculation is required. Now step number 2. Share of new partner Z in goodwill. Share of new partner Z in goodwill is equals to new goodwill into share of Z. New goodwill here is 20,000. Share of Z is 1/5. So it is 4,000. Now friends, from this 4,000, it is partial cash. It is partial cash. The reason is simple. 80% is only cash. So 3,200 is cash. 20% no cash. This 20% no cash would be 800. Now one more calculation. None of the old partner is sacrificing or gaining, but one extra calculation for distributing the final profit. For that we require new ratio. Now look the information. Look the information. Only old ratio and share of new partner is given. Sacrifice share ratio are not given. So at that time, this is the information of case 1. We have to assume the profit and we have to find the new ratio. So assume total profit 1 rupees. Then we need remaining profit is equals to total profit minus share of new partner Z 1 minus 1 by 5. 5 ones are 5, 5 ones are 5, 1 ones are 1. So remaining profit is 4 by 5. After that we will calculate new share. New share is equals to remaining profit multiply old share. New share of A. Remaining profit is 4 by 5. Old share is 2 by 5. So 8 by 25. New share of P. Remaining profit is 4 by 5. Old share is 3 by 5. So it is 12 by 25. Now ABC again I am making mistake. X by Z. New share of Z is 1 by 5 and we will multiply with 5. So 5 by 25. So friends, X is to Y is to Z. Sacrifice ratio 8 is to 12 is to, not sacrifice, sorry, new ratio is 8 is to 12 is to 5. We require this new ratio for giving the last profit to the partners. Okay, now we will go for journal. Now as per the format of journal, first entry is for distributing the old goodwill. Goodwill has debit balance, so for that partners are debited, goodwill is credited. Okay, so first entry would be, and partners are doing with fixed capital method, I think. No, that is not given. So direct X capital or current account debit, Y's capital or current account debit to goodwill account. Now the old goodwill is rupees 15,000. It is to be distributed in old ratio, that is 2 is to 3. So 15,000 by 5 into 2 is 6,000 and 9,000. Second entry is regarding bringing the capital in cash. Now new partner is bringing 50,000 as capital. So the entry would be cash account debit to Z's capital account 50,000. Now third entry is regarding bringing the goodwill premium in cash. Out of 4,000, 3,200 is only brought in cash. So entry would be cash account debit to premium for goodwill account. Amount 3,200, 3,200. According to the format, next entry is for distributing the goodwill premium. So premium is in cash and in no cash. So the entry would be premium for goodwill account debit, which is in cash. Then the name of new partner is Z's capital or current account debit, which is in no cash, to X capital or current account to Y's capital or current account. Now the goodwill in cash is 3,200, in no cash it is 800, so total it is 4,000. 4,000 is to be distributed in sacrifice ratio, that is 2 is to 3. 4,000 divided by 5 is 1,600 and I think 24. Now the last, according to the format it is last entry, but here we will pass one more entry also. Number 5. Now according to the format, last entry is regarding the withdrawal of goodwill. Here partners are withdrawing 40%, and I said partners can only withdraw the amount which is brought in cash. So first we will write the entry X capital or current account debit, vice capital or current account debit to cash account. Now they can withdraw only 40% from cash. So cash goodwill is 3200. From that they are withdrawing 40%. So they are withdrawing 3200 multiply 40%. They are withdrawing 1280. Now this 1280 should be distributed in 2:3. Divide by 5 into 2. 1280 divided by 5 into 2 is 512 and 768. Again I will explain this entry. Please keep focus here. As per the format, first entry is to write off the goodwill, second entry is for bringing the capital, third entry is for bringing the goodwill premium which is in cash, fourth entry is regarding distributing the cash, no cash and all the amount, fifth entry is regarding withdrawal. Now see, partners is withdrawing in partial cash. They can withdraw the amount that is brought in cash only. So cash goodwill is 3200. They are withdrawing only 40%. So total they are withdrawing 1280. 1280 should be in the ratio of 2:3 because this is in sacrifice ratio. So that is to be in also sacrifice ratio. So 2:3 of 1280 is 512 and 768. Now one additional extra last entry is for annual profit after Z's admission. Now how to distribute this annual profit after Z's admission? For that, first you should know that partners are receiving profit from P&L appropriation account. Things which I have explained in first chapter, that in final account or in second chapter you see. Final account where we are getting divisible profit in P&L appropriation account and profit is debited in that account. So entry would be P&L appropriation account, sorry, space is little bit. P&L appropriation account debit. This is divisible profit to X, Y, Z, including Z, okay. Capital or current account, because this is after Z's admission. Now as this is between three partners, so new ratio is used for that. New ratio is 8:12:5 and the profit is rupees 60,000. Now 8 plus 12 plus 5 is 25. So 60,000 divided by 25 multiply 8. 19,200 equals to 12 equals to 28,800 equals to 5 equals to 12,000. Okay, so this sum is very important. 30%. We have started this sum by necessary calculation. Which necessary calculations were required? First, sacrifice ratio. As old ratio and share of new partner is only given, so old and sacrifice will be equal. Second is about share of new partner in goodwill. New goodwill is 20,000. Share of that is 1 by 5, so 4,000. Now in the book itself it is given 80% is in cash and 20% is in no cash. After that, new ratio is required for this last entry, that after Z's admission first year's profit is 60,000. How would you distribute between all the partners? So for that new ratio was required. After that, writing the journal entries. First entry is regarding distributing the old goodwill, so it is 15,000 in old ratio. Next is to bring capital in cash, so cash account debit, partners capital account credit. Next is for bringing goodwill premium in cash, so cash to premium for goodwill. Next is for distributing, so premium for goodwill which is brought in cash, which is not brought in cash, it is distributed among all partners in sacrifice ratio. Now for the withdrawal of goodwill, we can only withdraw the cash goodwill, that is 3200, and partners are withdrawing 40% part, it is given in the question. So partners are withdrawing total 1280 in the ratio of 2:3, that is sacrifice ratio. Now a extra thing is given that after Z's admission profit of the firm is 60,000. Now from where you get divisible profit, you remember that final accounts from P&L appropriation we are getting debit side. So P&L appropriation in bracket divisible profit account debit to X, Y and Z in new ratio. So friends, our case 5G is completed. Now tomorrow we will go for case 6G. Till that time, write the notes properly and send it to me as soon as possible. That's all for today. Thank you so much.